Good morning, everybody, and welcome to the Credit Summit, sponsored by Equifax. And this is the 16th Credit Summit. And of course, it should have been about 6 weeks ago in what is Credit Week and has been Credit Week for the past 5 years. Credit Week was something we launched with a number of things in mind, actually. We wanted to bring the credit and financial services profession together in a number of different ways over a week and put a series of events together that had a different type and blend. The Houses of Parliament reception has become a staple in what we do. We're now a live broadcaster, which we learned during the pandemic. So we had a Women in Credit TV broadcast on the Wednesday of Credit Week. This was the third week in March. And then we didn't have the Credit Summit on the Thursday, and we didn't have the Leadership Award Programme Gala dinner on the Thursday either because of the train strikes. So hopefully we're at the end of these kind of things now and we can move forward without the kind of disruption that makes running our business hard and makes running many businesses hard as well. I was going to mention the economy, but I will leave that to Daniel Vanazza of UniCredit, who will talk about that in great depth, other than to say that it's an interesting time. The Bank of England economist, I think his name was Pill, a bitter pill to swallow, who said that we all have to accept to perhaps be a little bit poorer. That's whether we're consumers, businesses, government, whatever it might be. Interesting take by the media on what what may have some truth on either side of that, but you'll have your own view on it. I've been looking at the property market and looking at a few stories we've covered on credit strategy recently. Repossessions are going up 30% in the last year. There's an increase in older homeowners selling their home for the first time in decades. And Paragon, the buy-to-let mortgage lender, or the specialist mortgage lender, they produce some research where they assess how many of the properties on the open market are buy-to-let properties being resold. Over the last 10 years, it's been about 2% of all properties, residential. At the moment, it's running at 16%, which tells you something about the buy-to-let market and what that might have on house prices and the wider economy. But despite this, many people are still optimistic. That said, the world is changing. This week, along with a couple of colleagues of mine, we attended our conference for the media profession, the PPA Festival. And the giant German media consumer publisher, Bauer, produced some research there. These are guys, they've got radio, they've got magazines like Grazia, they've got a whole golf portfolio, motorsports, and so they've got a huge reach into consumers across Western Europe and beyond. Working from home has left people happier now. That may not be a surprise. But people are also more stressed as well, which is interesting. Two things are happening at one. And then what they call life management, and they measure this through an affiliate network. They have an affiliate network that pushes retail products out through their various different brands, so golf equipment through golf brands, motor, etc. Life management, which was the, organising your kids, your holidays, your car insurance, that kind of thing. There used to be a slot on a Sunday afternoon where they saw a spike in the data that was a life management spot. That's gone now. Weekends are 100% pleasure for people, and the life management has moved to Thursdays and Mondays in work hours. Golfers buy kit on a Monday, perhaps because they're burned by their failures of the weekend. And the drunk shopping that happened on Friday at 8 p.m. now happens on Thursday at 8 p.m. But there is drunk shopping. So two things are happening at once. We're happier and we're more stressed. The economy is struggling and performing. Property market worries, but the prices went slightly up in April as an average. And Manchester United are a good team and a bad team all at the same time. So are these stark results of the inequality gap widening? It's been talked about for decades. Maybe it's just starting to bite. Other content we're covering in credit strategy at the moment, clearly vulnerability, affordability, customers and first-time debtors are things that we're covering. But large banks are not seeing stress in their portfolio particularly yet. We hosted a dinner yesterday evening with Equifax with 10, 12 people from across all sorts of lending organisations, and nobody seems overly worried. These are all things we would call social issues, I guess. Big issues from the regulator under governance, consumer duty, IRB, and the new anti-money laundering measures as well. And then we're starting to think about the environment in more detail now as well. And soon we'll be launching a climate risk vertical within the credit strategy membership offering. I know the FCA, who we'll be hearing from later today, are asking you guys to give your view. I think it's a 30-year view on climate position and climate risk looking forward. And whenever we talk to people about that, we're met with a blank stare of what do we do? We're going to try and unify that, bring people together. We can't answer the questions, but we can at least know that you're not alone, and we'll work together on this to move forward. I talked about two things happening at once. In the middle of the pandemic, when I was trying to work out how do we move forward with a business that's 70% based on events such as this, I had a feeling that there may be a bit of a split, and that events like this would become more important because people get together less than before. And this is true in your own organisations. I think people are working on average probably 2-3 days at home, maybe in the office 1 or 2 days. That's going to have a material impact on your business's levels of knowledge as you move forward. But it's nice that we can get together here. And in the future, I think we'll be looking at packages to bring people, exec teams together here in a face-to-face environment to share with each other and with other colleagues in the rest of the industry. The other side of this, of course, is digital. And we're doing more and more in the digital world. We've gone 100% digital now. So you will not, the Credit Strategy magazine you see on your table in front of you is a collector's item. It's the final one. And whilst I'm sad about that in some ways, there's something with great serendipity about a print publication. It can't do the job that digital can do. It can't reach as far. It doesn't give us data. It doesn't let us know what you want and what you think and where we should go. And it's not as flexible. And if you're working at home more, the magazine's not going to reach you there either. So this is an inevitable move forward for the business. So the Credit Summit, in numbers, it's the 16th year. There are 7 streams today, 35 sponsors and exhibitors, 110 speakers, sectors, job titles, hundreds of billions of credit in this room, tens of millions of customers, but we only have one Krishnan Gurumurthy who's going to host later on. I'm going to thank all our sponsors who are going to appear shortly behind me, but we'll get to those at the end. But we'll do some housekeeping first. So, does everybody have a mobile phone? Could we get this out for a second? Oh, there we go. So go to Slido, and you will see the Wi-Fi in the top left corner, sponsored by Merge. Thank you, Merge, for doing that. The Wi-Fi code is CS 2023, and the password is Merge Recruitment ! Oh, I'm going to look this way around my eyesight. Merge Recruitment 1! I'll just wait a second while we get you all on there. The purpose of doing this, Slido is an invaluable tool during the day, and you've heard all this before from us. It's the way for you to interact. It's the way for you to make sure this is not people on the stage talking at you, but it's customizing what's discussed up here back to where you want to go. You can use the QR code as well. And we're probably going to have a Slido question pop up on there in a few seconds. Swap card as well. You should have had your swap card joining instructions. I'm really going to hammer swap card hard here because it's not only is the agenda on there, there's no paper agenda either this year. In a sustainable environment, that's the right thing to do. It's also got the room locations. All of the rooms are on this floor 3 and above, number 4 as well. If you're struggling with swap card, go to the Credit Strategy stand and somebody will be delighted to help you. If there is a fire alarm, I'm told it's genuine, so do the appropriate thing. And you will also have been given, we'll talk about coins in a second. So if there was a general election today, how would you vote? Top right corner, you can see how many people are on Slido, 75. Let's see if we can get that to 150. Can we get up to 150? Let's set ourselves a little target. That's probably reflecting polls at the moment, I would say. though it looks like the election will be in Q4 next year, and the incumbent government always narrows over that period. But I'm sure they've got some joys to help us over the next 12 months as well, so we'll see. I'm not sure that's going to move too much, but we'll leave it there. You also, in your keeping, will have 2 coins, I think, a red and a blue coin. Has everybody got those? They should have been given to you on the way in. All delegates will have a blue coin, and the red coin are for premium members. And we have a 2-coin voting system. And you vote in, there are kind of receptacles near the lifts as you come out of the room and to the left that way. Pop them in there as you go through. And the question, so here we go. What topic has had the biggest jump in attention where you work over the past 12 months? I'm not going to read all those subjects out. You can read them for yourself. Think that through, and then when you get a chance this morning, pop your coin. As I say, blue for normal delegates, red for premium members. So, I think that's all for me. I'll pop back in a second, but have a fantastic day. This day is all about sharing, learning, listening, interacting, giving opinions, talk to the exhibitors, find out what's going on in their world, what's new, and just have a wonderful day. So I'm going to introduce, from our sponsor, our headline partner, Equifax, I'm going to introduce Ryan Peacey to the stage. Ryan, please.
Good morning. Oh, the lights are bright. And welcome. What an honor to open the Credit Summit today. And Equifax is the proud sponsor of the event. As the first speaker, I've got 2 jobs today. The first job is to reflect on the journey that we've all been on. And the second job is to get you all really excited about what the day has to hold. Getting all of you excited does come with its challenges. We've got soaring inflation. Interest rates are continuing to rise, and the US banks creaking has given us flashbacks of the credit crunch. Are you excited yet? No? Well, let me try a little bit harder. Why don't we cast our minds back to the time when things were this hard? My first memory was in the late 80s. As an 8-year-old boy, I'm giving my age away, with 2 working parents, and I got a quick lesson on what it does to families when prices are soaring up and wages aren't matching. My mum had to take on 2 additional jobs to keep the roof over our head. It took its toll. I can still remember the tension between my mum and dad in the evenings at the kitchen table, but they did what they had to do to get us through. My second memory was from 2007, slightly different, is when I first joined the credit industry. I was a bit shocked because it's when the financial crisis first blew up, and it wasn't my fault. At the time, I was doing rugby on the side, so I was responsible for a semi-pro rugby team, and things were great. We were riding high in the league, we had a healthy budget, and then almost overnight, we lost funding, we lost our key sponsors, and I had to tell a bunch of very, very big men, bigger than me, that we weren't going to pay them. Now that is a crisis. The story ended well. We lost a third of our squad. We raised money. We were able to travel to our fixtures, and we did finish mid-table, which is a great result. We will all have our own stories of difficult times, but as I'm standing here today, I do see a massive difference compared to those times. We're better regulated than ever before. We're putting good consumer outcomes at the heart of what we all do. We have never had better tools to help everyone through. Tools like open banking. It wasn't a thing in 2007. Now over 7 million people are using it monthly. Whether it's to get cheaper credit or to switch products. Tools that help you say yes to more customers, when in in current times, it's getting harder to predict the future. Tools that when people do get in trouble, you can change and you can look to get them back on their feet and adapt to their vulnerable states. On the panel after panel today, you're going to see lots of innovation. Innovation that just wasn't around when I first started. Whether it's smarter technology, new data assets, or cutting-edge analytics. Working with so many of you here, I do see the positive impact that we all make on a daily basis. And the data is supporting that too, so I think we should be proud of what we've achieved. This isn't 2007, it's not the 80s, it's not a credit crunch yet. Transactions are showing that consumer confidence is still there, and spending is still on the rise. We're not seeing the spikes and defaults that we've all been predicting, but there's lots more that we can still do. So that's why we're all here today, to bring some of the greatest minds all together, to share ideas, to showcase innovation, and to make a difference. Now that is exciting, and I hope you agree. You'll see, you can't miss us. There's lots of Equifax as you walk in. There's lots of us here. Please come and speak to us. Come and say hello. It'll be a fantastic day, and I look forward to watching some of the panel members. Thanks so very much.